Las Vegas real estate 2025 and going into 2026. What happened in 2025 and what to expect in 2026? We have Miss Amy Farr here, one of the top lenders in Las Vegas. She's been in the lending business for over 30 years. Welcome, Amy. Thank you for being with us.
Thank you, Mark. I appreciate you having me
on. Of course. So basically, what is going on in the real estate market in Las Vegas? Everybody talks about the interest rates, and they think the interest rates is what's driving this market. Even though I have other thoughts, I can share that later on. What are your thoughts how this year started with the interest rates? Where were we beginning of the year?
Beginning of the year, we were in the mid-sevens, and we've seen the Fed do several rate reductions this year. And, mortgage rates don't follow suit with the Federal Reserve, but they eventually can catch up. And so we have seen the mortgage rates go down a point or more since the beginning of the year. So we are seeing some release in that regard.
That's great. Now, with that in mind, the fact that we started in the sevens, where are we now? Being December 2025.
So it depends on what type of financing you're doing. We can get them in the fives, but the average is in the low sixes.
Low sixes, six and a quarter, would you say? Okay, great. Being that the rates dropped 1% or more from beginning of the year, why is the market and sales slowed down?
That's a good question. I think that there's a couple of factors. We're seeing more inventory. The appreciation is still there. We're still seeing sales prices higher than they were at the beginning of the year. Buyers are still sitting on the fence. There's so much in the media about rates coming down that they don't necessarily trust that even with what we've experienced, that this is it, that there's going to be more reduction that they're going to be able to take advantage of.
Yeah. So based on that, do you anticipate more reductions, and where do you see it going? First quarter 2026 or next year in general?
Well, all indications based on current inflation and the talk with the Fed, we're going to see more reduction coming January and beyond. So, the forecast is good in that regard.
Got it. So if you could wave a magic wand, when do you anticipate the rates to hit 5% again? If ever.
Okay. 5%. If I could wave a magic wand, I'd say by the end of next year.
Really? Okay, so that's good news. We do have positive outlook ahead of us, and hopefully if we get to 5%, I think that's going to change the market completely and open a lot of doors and great opportunities for people to buy homes again, right?
No, for sure, because then we'll have sellers that are sitting on the fence with their 2 and 3% mortgages that they'll be able to say, okay, now this is something that we can start to consider.
Yeah, that's a tough one because I have 2.5% on my house. I'm lucky. And it's almost free money, and it's so hard to give that up.
Exactly.
If I ever, so if I ever do anything, I would probably rent out the house and then buy another one, or who knows? At that point, we'll see.
Right. I mean, that's the way that you can make it up, right? You keep your mortgage, you rent it out, then you still have
or maybe get a second mortgage on that house and pay the difference. Yeah.
Yeah, absolutely.
Yeah, because at that point, you can easily rent it out, break even, or get a home equity line of credit and still break even possibly, and then go buy another house. And at the end of the day, that's how the wealthy gets rich, right? By accumulating real estate.
That's exactly right.
Renting it out. That's great. One of the things that keeps coming up in the news is inflation and the economy.
Right.
Because I know last year when it was 7.5%, we were selling a lot more homes compared to today, which is 6%. Sales did go down. In general, the number of sales in the Las Vegas market, transactions dropped by 35% year over year. So based on that, given that the rates dropped, why do you think sales dropped as well? Do you think inflation has something to do with it?
I do. And I also think affordability has become an issue because even though the rates have dropped, like we were talking about, the values have gone up.
That's true.
It's not necessarily given a particular home buyer a difference in their buying power.
That is true. And I believe that, I know from my case, I put myself in other people's shoes. We used to go to Costco, spend $300. Today, I'm spending $500 for the same items.
Right.
And it just, in general, cost of living went up, and it's affecting a lot of middle class or even lower income people that would like to buy. So it's interesting to see how it's all going to change. And hopefully with the rate cut that's going to drive economy in general in 2026, and we'll see more buyers and sellers, and the market will be moving again.
Right. And I hear in Washington that there's been so much talk about trying to make it more affordable for housing, but the shift is more outside of the walls,
Right,
to bring down the cost of eggs, bring
Yeah.
down the cost of
Yeah.
your Costco bill, so
That's
that
true.
you have that, then that frees up more money to apply towards the mortgage.
That's true. Well, that's interesting. And so basically, based on that, shifting from your primary homeowner that is renting and possibly will be, hopefully with the lower rate, they'll be able to buy. Do you anticipate prices to go up by any chance when rates drop? Because the demand is going to increase automatically.
Correct. I do expect that if the rates come down, then the values will go up, the prices will go up.
Yep.
You know, even with sellers reducing the prices, even in the
Right.
last 12 months, we haven't seen a decrease in.
That's right. No depreciation.
Right.
Yeah.
And we're not having any ill effects from what could be the opposite as far as
Right.
lending rules as well. So I do see that we're going to.
In a way, it's good because even though the market got very soft for some sellers, it did not really depreciate, such as Phoenix. I know it dropped 10 to 15%. Florida, Miami got hit really hard. Austin, Texas, and Houston also depreciated. So Vegas being the market that we're in, I believe the demand continues growing based on the people that are moving here.
Correct.
And of course, as you look around, Vegas is not a little town anymore. It's become a big boy
Right.
with all the big companies, sports franchises. So it's going to be interesting to watch. And because of that, we work with a lot of investors that are always buying rental properties in Vegas.
Right.
Do you work with investors?
Oh, yes, all the time. There's so many options too. You know, you can do traditional financing to strictly financing based on what the gross rents will be.
Rents, yeah,
Yeah.
that's interesting. Yeah, and one thing about Vegas, 40% of Las Vegas is actually owned by landlords or second homes. So there's a lot of renters, and because it's such a transit city, people still come and go a lot. That market is always booming, and it's a
Right.
great place to buy an investment property and
Absolutely.
be able to rent it out without any problem. So last words about the market?
I think it's very hopeful for 2026. I think it's going to be
Yes.
great in terms of projections for rate, projections for affordability, and for the supply. So I think it's going to be great for both buyers and sellers. I'm excited for the new year.
That's great. Yes. We all hopefully and believe 2026 is going to get better. As rates drop, we're going to see more movement. And based on that, thank you very much for your time, Amy. This is great
you,
information. For more information, always follow us, Mike and Team Chobanyan and Miss Amy Farr with All Western.